We got our first. The fat cats at the credit card companies have noticed a decline in usage over the last year. So they've come up with a new scheme that you really need to know about. But first, we're always on the lookout for smart professionals as we grow our financial services footprint across the US and Canada. If you have a passion for all things personal finance and a desire to help people understand how to make their money work for them, we want to hear from you. We'd like to show you how you can start your financial services business by partnering with some of the most reputable names in the industry, including Nationwide, Aegon, Pacific Life, and many others. If you've ever considered investing in yourself by starting your own business, I want you to know that the best time to plant a tree is 10 years ago. The second best time is right now. Contact us using the email address in the link below. Let's talk about the future. All right, credit card companies have noticed in the past year that people aren't using that card as much for obvious reasons. There's, no real place to go and nothing to do by and large. A lot of places are shut down, have been for months. So people aren't going to the restaurants. They aren't going to buy clothing, not doing those things that would normally cause people to whip out that credit card. It's not coming out of the wallet. So the credit card companies have come up with a new idea, and we'll see if it spreads. If it works, it definitely will spread. As you can see from the headline here in the Wall Street Journal, some banks want to consign credit card interest to history. At first blush, you might think, oh, zero interest credit cards. There's an idea. But these companies exist for a reason. They're making money. If they can't charge you traditional interest, they're going to come up with a way to get that money. Okay. Otherwise, they're not going to be in business. They have to be creative. Now, your job is to understand the things that are coming down the pike and then figure out how to make that potential action work for you. So this article is going into a bank down in Sydney, Australia, that they were wrestling with the reality that they're not getting those interest rates from these charge cards, from these credit cards, the way they used to before 2020. So they're brainstorming, and someone says, hey, how about a no interest credit card? Now, since they've got to make the money, if you're going to take interest away, you're going to obviously make up the money in some other way. So let's go through a few of the selections here in the paragraphs, and then we'll talk further about it as we go. But understand this also. I'm going to link the article. I don't know if you have a Wall Street Journal subscription or not, but I'm going to link the article. If you don't have a subscription and you don't usually go to the Wall Street Journal, although that is something we highly suggest. In fact, our most watched video is how to read the Wall Street Journal. I will put that up here as well. You should still be able to go on and read this, and we'll track it and make sure that you're getting all the information if this comes to areas outside of Australia. So, worried about dwindling credit card usage during the coronavirus pandemic and the rapid rise of startups like Australia's Afterpay and Sweden's Klarna Bank, AB, that allow consumers to pay for goods in installments, some banks are rethinking what has been one of their most lucrative businesses, that good old credit card. All right, National Australia Bank, known locally as NAB, launched a no-interest credit card in September. Users get a fixed line of credit, and the bank levies a monthly fee, which is refunded if the customer maintains a zero balance and doesn't use the card. Okay, so if you don't use it, you don't pay. But how many people are not going to use it? The banks, they know what they're doing. Commonwealth Bank of Australia, the country's largest lender by market value, also unveiled a no-interest card last year. So this is kind of in the testing phase down there in Australia. They're gonna inform the rest of the world how this works. The experiment is not being replicated in the US, where most credit card issuers charge interest when holders carry balances. But if they prove to be successful, Australian banks' no interest cards could drive change rather in other markets. So, okay, this is where it gets interesting. Fees on cards offered by NAB and CBA vary according to credit limits. So they're still assessing limitations based on credit score, which is obvious. I mean, how else are they going to give you the potential to go out and rack up a bunch of charges if they don't base it on some barometer, credit score being and credit limits being the obvious choice there? For example, a balance of 1,000 Australian dollars, equivalent to 777 US dollars, on CBA's no interest card could accrue nearly $373 in fees over 40 months if there's an outstanding balance each month. The same balance on the NAB card repaid at that product's minimum rate would cost about $225 over 29 months. In both cases, that is more than the interest accrued by a customer making the same repayments on a regular card with 16.6% annual percentage rate, with a 16.6% APR, the typical rate in Australia. And like with other cards, customers are required to make minimum monthly repayments on any outstanding balances. So the quote, no interest, unquote, credit cards are actually going to have higher fees than the interest you would pay on a 16.6% card. That's about average where interest rates are for credit cards, is around 16%. So if these cards do come to America, then the same philosophy will hold true. You have got to pay that thing off within 30 days. You don't want to carry over a balance on the interest credit card, or apparently the no interest credit card either, based on the way that they've arranged this. Still, the banks are betting that consumers will like the products for their simplicity. It's very simple. You're just going to get charged more. No interest cards are designed to give customers more control over their spending via a product that is easy to understand, said Angus Sullivan, CBA's group executive of retail banking. Now, that's a bunch of gobbledygook, okay? Give you more control. How do you get more control? You're still using the bank's money, and you're still being charged for the usage of that money if you don't pay that balance off in 30 days. This is just buzzword, corporate buzz speak to try to attract people into thinking that this is a good thing. Read between the lines, people. According to Australia's central bank, the country's credit and charge card balances fell by almost 34% in the past 2 years through October, to the equivalent of 16.3 billion US dollars. More than 60% of the decline came in March and October last year, as the pandemic pushed Australia's economy into recession. So, moral of the story, do not carry those balances over. I don't care if they come to America with this and they try to jazz it up like the guy did earlier in the article. Basically, it looks like you're going to be paying more than you would be if you had, a 16%, almost 17% credit card here.